Welcome everyone to this week's edition of Hawking Alpha's Where's Your Stop? It is June 25th, 2014. This past week in our newsletter we talked about essentially inflation. Is it here or not? Is the market pricing it in? What's essentially going on? In one of those articles we had seen where they had said, take out everything else, but if you actually look at what matters in terms of, gas, electricity, and food, inflation is here. So we just wanted to go ahead and do that. We wanted to go ahead and see what the market was looking at in terms of pricing that. So first one up, we wanted to take a gander here at natural gas, the futures contract. Last signal that we had on was basically the last day of November. And we've essentially stayed outside of the noise, letting natural gas continue to prove itself to the upside as volatility and volume in terms of price continued to increase dramatically. There was obviously that longer cushion that we gave it until we started to move our stop up again in about May of this year. Now, right now, we can see that natural gas has really been absolutely sideways in between that 4.5 and about 4.9 range. And because of that, what's going to happen here is that pretty soon, some of our advanced exits are going to move up very quickly and make natural gas prove itself to the upside. Because for us, it's investing is that matter of we want to stay outside the noise, but in relation to always setting up a positive skew trade in terms of opportunity cost to economic cost. Something that's going sideways and tying up our capital is not really worth our while. So let's take a look here at DBA. This is a agriculture ETF. Kind of gives you an idea of essentially representation of a bunch of different agriculture futures contracts. Last signal that we had was basically February of this year. Both natural gas and DBA are two trades that a lot of our portfolios are currently in right now. It's been a great trade for us, and obviously, yes, we've absolutely seen this skyrocketing action, and because of that, because of the price volatility and volume. Our stops have incrementally moved up, but also given a great deal of cushion to allow it to continue to prove itself. Now, obviously, we've come back down. Looks like we've formed a lower low now, so we're going to see what's going to happen on a responsive move back. But right now, we've absolutely seen a large appreciation in food. Now, from a larger macro perspective, obviously, this is not that big of a deal in relation to where we were in 2011. So it's always important to look at price in relation to context. In terms of trying to extrapolate out into the macro. Last but not least, we wanted to take a look at electricity. This one's a little bit more difficult, but we're going to go ahead and we're going to use what's called the grid, GRID. And once again, we just want to take a look at the macro. Yes, electricity is breaking out to essentially new all-time highs, which is interesting in terms of compared to 2011. The last bullish signal that we had was back here in essentially July of 2013, and essentially we've been moving up in a very step-like slow manner, especially because from a utility perspective. And so you can see that our stops have also been moving up very incrementally and step-like, but consistently staying outside of the noise, letting price prove itself. Obviously, in here, we could possibly be seeing this lower high begin and possibly a new lower low forming if we break below this 36 area. So, have we seen considerable appreciation in terms of what everybody's going to be looking at for an inflationary measure? Absolutely. Whether or not this means that it's the 1970s all over again, I don't think that price is really putting that in the picture right now. But we will see essentially what happens going here forward. And here's to staying outside of the noise, and we will see you guys next week.